there's a huge pool of capital that hasn't even touched it yet. And so that's what you're going to see coming through the ETFs. Mm-hmm. And that's that next jolt. We're going to get regulation in the next 12 to 18 months. We're going to have the Fed cutting rates. And we've got this new vehicle of adoption that is just getting started, right? The ETF is 2 weeks old. Usually ETFs get announced and they don't start trading for 6 to 7 weeks. So they give the sales forces a ton of time to be able to go make their phone calls. In this case, because of the grayscale thing, they had 1 day.
During an exclusive interview at Global Alts, Michael Novogratz, the CEO and founder of Galaxy, shared his deep insights and predictions, reaffirming his bullish stance on Bitcoin. Bitcoin is steady as the U.S. Federal Reserve opts to keep its benchmark Fed funds rate range unchanged at 5.25% to 5.5%, and ETFs continue to witness substantial volume. After 2 weeks of a slow downtrend following the approval of the Bitcoin spot ETFs, Bitcoin staged a mini recovery earlier in last week. The recovery was short-lived, however, with Bitcoin falling 2.65% late Wednesday after the first FOMC meeting for the year, leaving rates unchanged. As per Michael Novogratz, the Federal Reserve indicated the conclusion of its rate hike cycle, suggesting an upcoming phase of rate cuts, which served as a positive factor propelling the crypto markets forward. Senator Elizabeth Warren and a coalition of lawmakers have intensified their campaign against crypto-related fraud and money laundering. During a recent Senate Banking Committee hearing focused on addressing scams within the banking system, Warren highlighted the critical need for legislation to curb the misuse of digital assets. As the debate over crypto regulation continues, the Senate and the House of Representatives are exploring various legislative approaches to address the complexities of the digital asset market. Jeremy Allaire, CEO of Circle, has indicated a substantial likelihood of the United States passing significant legislation for the stablecoin sector in 2024. According to Michael Novogratz, optimism remains high despite the ongoing regulatory standoffs in the U.S. This optimism is fueled by the anticipation that the upcoming elections will bring about leadership changes, potentially resulting in regulatory clarity for the crypto industry. Now let's delve into the video. But before we begin, consider subscribing to the channel and hitting the bell icon to stay updated with the latest content.
From a crypto perspective, we came out of the Fed changing policy in 2021 and starting to hike rates aggressively. And so you would think hard assets like crypto and gold would go down, and they did. What accelerated that was all the fraud and bad behavior in the space. And so you had FTX and Celsius and just an embarrassment of bad participants. And so crypto is built on trust, and we lost a lot of trust. And so you had what's a classic market capitulation. Everybody hated it. You couldn't sell enough. Everyone deleveraged. No one's ever going to touch it again. And so when there's complete blood on the streets and markets, it's when you're supposed to come in and buy. It's very scary. You might look like an idiot, but that's when the greatest buying opportunities were. So Bitcoin at 18, 17,000, with hindsight was a great buying opportunity. So what switched? How did we go from all those headwinds to tailwinds? First, the Fed got closer to finishing their rate hike cycle, right? They're hiking. They're not going to hike forever. And so you could sense and then see the pause, and now we're going to start the rate cutting cycle. And so that was the macro tailwind. You had a weird combination of good things happen, right? Grayscale, which was this big closed-end fund full of Bitcoin, sued the SEC and said, this is unfair, you won't let an ETF happen. And they won. The reason we have an ETF is not because Gary Gensler decided, I really love crypto now, or the Biden administration, is because they lost in the courts. We have 3 parts of government, and thank God for the courts in terms of the crypto industry. And so all of a sudden we're going to get an ETF. Larry Fink, one of the most influential asset managers in history, came out and said, hey, this thing called Bitcoin, I know I used to think it didn't serve a purpose, but it's pretty important. And so the fact that Larry Fink got orange-pilled, monstrously important, right? Because it represented institutional investors everywhere. There are lots of different players, but he holds a unique post as the head of the largest asset manager in the world. And all of a sudden, crypto's always been about a macro story and adoption. you could start sensing, oh, adoption is going to come. And so people start front running that. We also cleared up Binance, right? The biggest crypto exchange in the world is Binance. There were all this worry, is the money there? CZ settled with the government for some KYC fines, paid a huge fine, and stepped down. And so the risk around Binance, the biggest player, went from here to here, right? So now it's an exchange, it's still the largest exchange, but no one thinks, oh, it's gonna get shut down in a week. No one thinks they don't have the money. It's just an offshore player. And so we took a lot of the tail risks away and put a tailwind together. And now you got a position where, what's left to really get us going? Well, the US still is in a stalemate on regulation, but the optimism is there's 11 months left to an election. And no matter who wins, Democrats or Republicans, Gary Gensler's not gonna be the SEC chair. You are gonna get some legislation. You're gonna get movement.
Even with the ETF approvals, a Deutsche Bank survey of 2,000 retail clients shows Bitcoin still has a way to go before mainstream acceptance. Novogratz highlighted the success of other ETF providers like BlackRock and Fidelity, who have rapidly attracted significant assets. Asset manager CoinShares reported Monday that Bitcoin-focused investment vehicles received more than $700 million in fresh money last week as inflows to new spot Bitcoin exchange-traded funds offset the abating outflows from Grayscale's flagship fund. BlackRock managed IBTC and Fidelity's FBTC, the two clear leaders among the newly issued spot Bitcoin ETFs, booked $884 million and $674 million in weekly inflows, respectively. Both figures were slightly higher than the week before in dollar terms. Michael Novogratz predicted an increase in leverage in the space as broker-dealers now have more options to provide leverage to investors. Now, let's redirect our attention to a video.
Listen, Grayscale had a product that allowed people access. It was shocking to me that the SEC, who cared about the consumer, allowed that product through, because it was broadly a closed-end fund with no way of closing the discount, with very high fees. So consumers at times bought at a premium to the underlying. That went to a giant discount. And it was a terrible consumer retail product. It was a terrible institutional product. It was a great product for hedge funds to arbitrage, right? They made a fortune when it was trading at a premium, and they made a fortune when it was trading at a discount. And so, shout out to the guys at Grayscale for making hedge funds a lot richer. But if I was the SEC, why in God's name did I approve that product? And so now that, the arbitrage is gone, people are like, I didn't have a grand experience. They have higher fees, much higher fees than Invesco or BlackRock or Fidelity. So if I'm not tax driven, instantly I'm shifting over. A lot of people bought the thing at a great discount. They made enough money, they said, let me just move on in life. And so we're seeing that churn. It's slowing down, right? But I don't think any new money is going to come into Grayscale unless they do something dramatically different to rebuild trust and lower fees. And I think you're going to see that money still drift into the other ETFs. And so that's a whole lot of money, right? I mean, BlackRock and Fidelity have created a $2 billion ETF faster than any other ETFs in history. And so hats off, right? And so there's no way to see this as anything but a success. But Grayscale's lost,
right?
You can get leverage on your Bitcoin ETF, right? Now it's just a stock. And so if you're short the Bitcoin miners versus long the ETF, it's a much more capital efficient trade than it used to be, right? Because you have your assets at the same broker, as opposed to you've got Bitcoin over here and your stocks over here. And so I think you're going to see more leverage come into the space, just because one of the things that broker dealers do is give leverage. And now they've got something that they'll be able to give leverage with.
Bitcoin mining has again been scrutinized as U.S. regulators are headed for election. U.S. Treasury Secretary Janet Yellen is set to tell Congress that the crypto industry poses several potential hazards to the financial system. including the dangers of stablecoins, runs on crypto platforms, and volatile prices. The question arises about what the regulation of the cryptocurrency industry will look like in 2025. Share your thoughts in the comments. If you found this content helpful, give it a thumbs up, and remember to subscribe to stay updated. Thank you for being a part of this journey with us.